Before we begin, let me answer one simple question. Why did I choose the Royal Q bot? Well, because it makes me money 24/7 while I'm busy with other things, or just relaxing, or even sleeping. Plus, beyond providing consistent passive income, the bot also gives me peace of mind. It doesn't sell at a loss, there are no liquidations like in futures trading, and I don't have to constantly watch charts or stress about market moves. That's why I'm glad I found this tool. And of course, crypto is the future, making it the most promising market for growth in the years ahead. So now, let's quickly go over what you need to get started. You'll need $120 to pay for the bot's annual subscription, at least $20 in your Royal Q account to cover trading fees, and at least $200 or $300 in your exchange account to be used as trading capital. But if you have more, that's even better. So in total, to start comfortably, you'll need at least $340, ideally around $440 or more. We'll talk more about that later. And let me also remind you that the funds in your exchange account are fully under your control. The bot cannot do anything with them except buy and sell the coins you've configured in the app. So, if you already have those $340 or more to start, the next step is to decide which exchange you'll connect the bot to. I personally work only with the 3 most reliable exchanges in the world: Binance, Bybit, and OKX. Use the links in my Telegram channel or in the video description to register your account and receive discounts on trading fees and other bonuses. You might be asking, what's the difference between these exchanges? The strategy works exactly the same across all platforms. The only difference is that on Binance, only USDC trading is available, which is especially convenient for European residents. Bybit and OKX, however, support only USDT trading pairs, which are suitable for users from all other countries. Functionally, there's no real difference between them, just pick whichever one you prefer. Short note: USDC and USDT are stablecoins, both pegged 1-to-1 to the US dollar. They're issued by 2 different companies. USDC is managed by Circle, while USDT is issued by Tether. There's no other significant difference between them. Now, let's talk about the cryptocurrencies we'll be trading. The selection of assets my strategy trades is based on their utility, market cap, and project reliability. All the traded assets are within the top 100 cryptocurrencies globally, and in fact, most of them are in the top 20. Of course, nothing is risk-free. Risks exist in both crypto and traditional businesses. That's why you should always follow the principle, do your own research. Now let's review some key parameters from my Coin Matrix table. One of the most important parameters for the bot is the buy order limit, called first buy in amount in the app. This is the amount the bot will use to make purchase of an asset. The strategy allows for up to 70 such purchases at different volatility levels of the asset's price. It's thanks to these multiple buy and sell actions at different price levels that we are able to generate consistent profit. On Bybit and OKX, the minimum trade size is $6 for all assets. On Binance, the minimum depends on the specific asset due to exchange rules, but in most cases, it's also around $6. This number is also important in the context of the parameter minimum amount for trade. I calculated these values based on each coin's deepest drawdown over the past year, as well as the minimum order size required by the exchange. To earn passively without constantly checking the bot, just allocate the exact amounts per asset as shown in the Coin Matrix table. Why is that important? Because if you allocate too little or try to trade more coins with less capital and the asset price drops, the bot will keep buying, but eventually it will run out of funds and stop trading. At this point, we need to mention one more important parameter called margin call. A margin call refers to additional purchases. The bot makes one initial buy when you add an asset to trade, and all further buys triggered as the price drops are called margin calls. And this is a key feature, because margin calls are what generate us more profit than anything else. So, when you don't have enough funds on your exchange account, margin calls will stop, and the bot will have to wait until the price recovers enough to sell the existing position, free up funds, and only then can margin calls resume. As you understand, this slows down trading activity and reduces your profits. That's why it's better to allocate the recommended amount per coin from the beginning, as shown in the Coin Matrix, so you don't have to worry about drawdowns or margin call interruptions. I also recommend starting with coins in the green zone. They are the most stable and reliable, even if slightly less profitable. Then you can move on to the orange zone, and only later to the red zone. This step-by-step approach allows you to gain experience with more stable assets, better understand how the bot works, how your deposit behaves, how to react to volatility, and so on. I'm explaining all this in detail so that you truly understand how your investment tool works. But in practice, you can simply connect to the strategy, make deposits as shown in the coin matrix, and receive passive income. However, if you're interested in the details, I'll show you how the bot and my strategy work directly on a typical trading chart. But first, let's talk about the concept of P&L and how profit is calculated with this tool. It's important to understand this to clearly see the trajectory of your investment. So P&L stands for profit and loss. There is realized P&L, which is the difference between how much you initially invested in an asset and how much money you received after selling it. And there's also unrealized P&L. It's the difference between your initial investment and the current market value of that asset in real time when you haven't sold it yet. Let me explain using a house example. Imagine you bought a house for $100,000 a year ago, and now its market value is $120,000. So you have $20,000 in unrealized profit because the house has gone up in value, but since you haven't sold it yet, no profit is recorded. Once you sell it, you will make $20,000 in profit, and only then will the profit move from unrealized to realized. The same goes for a price drop. If the house's value fell to $80,000, but you haven't sold it yet, you have a $20,000 unrealized loss. Only once you actually sell it will you lock in a $20,000 realized loss. I hope I explained it clearly. In our case, the cryptocurrencies traded by the Royal Q bot also have P&L. You can see the unrealized profit and loss for each individual asset the bot is trading right here, and for all assets combined right here. It reflects the current market value of the assets the bot has purchased in real time. At any given moment, it might show a few percent in profit, or a small to significant loss, even up to dozens of percent. That's fine though. At the same time, we also have the realized P&L. You can see it right here, and since the bot only sells in profit, it's always positive. The same goes for your exchange account. It also has an unrealized P&L. Here's an example from one of my accounts. Let's start with the numbers from the tracking sheet, which, by the way, you'll get for free when you connect to my strategy. So, if we just look at the raw figures, the value of my exchange account assets should equal the amount I allocated for trading, that's $3,850, plus the profit the bot has made so far, which is $558. That gives us a total of $4,408. Now let's look at the exchange account. As you can see, the current value of all my assets is $4,077, which is $331 less than should be. And that's exactly what's shown in Royal Q. Why? Because the market is constantly moving. At the time of this recording, the market was going through a correction, so the assets the bot bought are temporarily worth less, and that's reflected in the unrealized profit and loss. As you can see on the chart, in just one day, the total value of all assets fluctuated from a high of $4,102 to a low of $3,973, and then started to rise again. So don't worry if the value of your assets on the exchange or in Royal Q is lower or higher than what you initially invested. It changes in real time based on the market. But the goal of the bot and the RoboTrade strategy is not to constantly look at a high unrealized profit and loss. In fact, we don't care about it at all, as well as we don't worry about how far the asset price drops or when it will be fully sold again. The only thing that matters is that the bot always has enough free funds to continue executing margin calls, because that's where most of the profit comes from. The core of the strategy is to generate as much profit as possible by executing a high volume of trades. Ultimately, the goal is for the bot to earn more than the amount we originally allocated for trading. In practice, it looks like this. Let's say you invested $5,000. Over the year, the bot earned you $3,000 in net profit. That's a 60% return on your deposit, which is an excellent result. And if you're not planning to exit the investment, nothing else really matters. You simply continue your investment journey, and the bot keeps trading and generating profit. Only when you plan to exit the investment do some important factors come into play, most notably the P&L, since the current value of the coins the bot is trading becomes relevant. Let me show you what that means in numbers. Say you invested $5,000 and the bot earned $3,000, so your total gross balance is $8,000. But to fully exit, you'd need to sell all the coins the bot is currently trading. Depending on market conditions, their value may vary, but most often it's lower than the amount the bot originally used to buy them. That's because of how the bot works and the volatility of the assets. For example, let's say the bot has used $4,000 to buy assets, leaving another $4,000 in your exchange account. At that moment, let's say those assets are worth around $2,500 due to a market dip. So you sell them for $2,500 and add that to the $4,000 already sitting on your account. That gives you a total of $6,500, meaning you've made a net profit of $1,500 after exiting the investment. Now imagine you don't exit the investment for 3 years, and the bot earned you $9,000. That brings your total to $12,500, which means a net profit of $7,500, even though you originally invested only $5,000. And that's not even counting the potential from reinvesting profits and the power of compound interest. Not bad, right? That's exactly why I chose this tool. Of course, you could always exit at a better or worse time depending on market conditions. And by the way, there's also a way to exit even on your initial investment, but that's a topic for another video. As you can see, the longer the bot works, the more profit it generates. Personally, I treat RoyalQ as a long-term tool. I'm not planning to exit in 1, 2, or 3 years. The bot has been working since 2017, and I believe it'll continue for many more years. That's why I'm in this for the long haul. I don't care what the current profit and loss is. I don't care what the market looks like today. The only thing that matters is that I see daily profits on full autopilot and how my investments continue to grow. And finally, for those who love details and technical aspects, I'll show you how the bot works by illustrating its actions on a typical trading chart. But let's remove all the extra stuff to keep things clear, like this. Just note that all numbers are approximate. The actual parameters vary by coin because each one is individually selected based on asset-specific analytics. So, right here, you've started trading an asset by making the initial buy order. If the price of the asset goes up by 3% from this entry, this order is sold with a 3% profit. But, as we can see in this case, the price went down instead of up. So if the price drops by a nominal 1%, the bot makes another purchase at this level, executing a margin call, and adds it to the first one, merging the two orders into one. So now your average buy price is lower. It's roughly around this level. And accordingly, from this new average price, you now need a 3% increase to sell this combined order. For example, that would be somewhere around here. And in this way, the first 5 orders are combined into one overall order and sold together, while all subsequent orders trade independently from them and from each other. Let's dive a bit deeper. So, if after the second purchase, the price continues to drop, the bot makes a third purchase, which also gets added to the previous 2 orders. This lowers the average price of the total position even further, and therefore lowers the target sell price as well. If the price keeps falling, the bot executes a 4th buy order, then a 5th. This forms a pool of the first 5 orders into one combined order, with an average price calculated as the total cost of all 5 purchases divided by the total amount of coins bought. This combined order will only be fully sold when the price increases by 3% from the average price of the entire pool. In our example, the bot has already made 5 orders, but the price keeps falling. At this point, the 6th purchase happens, and this one is not added to 5 initial orders. It will be sold separately when the price increases by a nominal 1%. Let's mark it somewhere around here. But the price keeps dropping, so a 7th purchase takes place, and just like the previous one, it will also be sold independently when the price rises by 1%. That would be somewhere around here. Suddenly, a reversal happens, and the price starts to rise. It first reaches the sell level of the 7th order, and we already have a net profit. Then the price climbs to the sell level of the 6th order, and that one gets executed too. Now our position consists only of the combined order from the first 5 purchases. As we noted earlier, it's set to be sold around this point. Until the price either reaches the target sell level of this combined order or drops low enough to trigger a new 6th purchase, the bot simply waits for one of these 2 scenarios to unfold. As we can see on the chart, right here, the price hit the sell level of the combined order, and it was sold, successfully closing the trading cycle. Now we've made even more profit. Now, almost immediately in the same spot, a new trading cycle begins with the execution of the first buy order, which will be sold when the price rises by 3%. Let's say that happens around here. We can clearly see the price going up, and this order gets executed, thus closing a trading cycle consisting of just one order. As you already understand, the bot makes a new purchase again in this same area, and the sell price will now be somewhere around here. The price rises, and the order gets sold. But this time, the new trading cycle begins at the very top. The first purchase is made here, and the corresponding sell should happen somewhere around here. However, as we can see, the price now starts falling. So the bot begins making additional buys. Here the second order, then the third here, the fourth, and the fifth, just like that. A new pool of the first 5 orders is formed again. The average buy price of this pool will be approximately here, and the sell price around here. The asset continues to decline, and the bot makes a 6th purchase here. Its sell level will be over here. Then, it makes a 7th purchase. Sell level here, followed by the 8th, 9th, and 10th. Now the price rises slightly and reaches the sell level of the 10th order. It hits the 9th, 8th, and 7th as well. However, the price doesn't reach the sell level of the 6th order. Instead, it dips again, so the bot makes another 7th order and then follows up with an 8th. The price rises once again, and this time both of those orders are sold. After that, the asset movement repeats. 2 more buy and sell orders are placed and completed. This time, though, the price climbs even higher and finally reaches the sell level of the original 6th order. What's more, it keeps rising, but still not enough to hit the target sell price of our combined pool of the first 5 orders. So the bot continues executing dozens, sometimes even hundreds of separate buy and sell operations, each generating profit. Eventually, after a while and numerous transactions, the price finally reaches the level where the bot sells off your entire position. After that, a new trading cycle begins, operating under the exact same logic. And by the way, we're not really focused on fully selling the first 5 orders. The main goal is to make as much profit as possible, and in practice, most of it comes from margin calls anyway. So yeah, this is how the bot makes money for us. To sum up, only the first 5 buy orders are grouped into one combined pool, while all other orders are traded independently, both from that pool and from each other, generating you regular profit, which is displayed in your Royal Q app under the Profit Details tab. So, I hope my explanations in this tutorial helped you understand how the Royal Q bot and my trading strategy work. If you have any additional questions, feel free to ask them in the Telegram comments. If everything is clear, you can go ahead and start the registration process in the bot. All the links and step-by-step guide are also available in the pinned message in the Telegram channel. I wish you guys the greatest possible profit.